I have a quick review for you. Based on the trade that I asked you to take, I did a live execution 2 days ago, and then I'm here to, not 2 days ago, I mean, that was just yesterday. I'm here to elaborate on why I took that trade, and then the outcome. Okay, so that was 2 days ago, sorry. So that outcome, that was on this particular day. All right. So what was the outcome of the trade? Let me try and use lighter. Okay, so on this particular day, let's see what actually transpired and why I took that trade. I mean, it was on the previous video, so you can go and watch. So I'd like to begin by saying that if you are new to this channel, please do well and subscribe, um, and check out the previous videos for yourself. You would really enjoy them. There have been videos where I post live execution. I tell you to execute certain trades, so do well and subscribe to the channel. As I keep giving you more updates, I believe that you are going to enjoy the profit. All right, so let's go to today's video quickly. 2 days ago, prior to the trade that I took, was a particular reason, so, and what was the reason? We saw price descending all the way from um, this side. Price descended all the way from this side, and it came down towards this area. And I told you that we're going to execute a trade and wait for price to retrace into the mean of this particular range here. And I executed a trade live, took the trade around this area, and lo and behold, price moved towards this area where I took my profit off. So what was the reason behind, what was the premise behind me saying that let's execute a trade here and exit here? All right. So on the daily time frame, let's go to our daily time frame. So on our daily time frame, this was the area where I executed it. But on the 4-hour time frame, there was a rejection block right in here. Right in here. So this swing low here, you could see that price traded back into this area from the wick to the body of this candle. From this wick to the body of this candle, you could see that price retraced back into this area, into where the body of the candles are. And what happened? Price rejected, and it took price higher into the sky, and even took down some uh, long-term high that was formed here and then here as well. So the previous day's high was taken from this area. So this area, there was a rejection in this zone. So quickly, let me put my lines for you to see clearly. So you could see that right on the body of this candle to where the wick is, price couldn't go or penetrate into the wick. It couldn't trade below this wick. So necessarily we could see that there was a rejection block on the 4-hour time frame. So what I expected was that should price trade back into this rejection block, there's going to be a reversal. And beautifully, price traded all the way back into the rejection area, and look at where the line is. It was right on top of, so I executed the trade here. And quickly, because we have this swing, normally we are expecting price to go back to the mean of the swing. So from here all the way down here, where do we have the mean? This area. Beautifully, price came all into this area. Look at the level of precision. Price came exactly into the mean threshold of this swing here. You know, this is the kind of level of precision I'm talking about on my channel. All right. Now, someone may ask, so how do I identify to see this rejection block and all that? Previously, I had explained that. So a typical example of a rejection block is this. Anytime we have a swing and then it leaves a long wick, an ample size of wick, and then there is a rejection or a rally away from that area, we take notice. So for instance, we measure from the body of the candle to where the wick ends. Now this forms a rejection area. So you will notice that anytime price trades back into where the area of the long wicks being formed, coupled with this, is next to it is an order block, which even gives more body or gives more meat to this rejection wick that has been formed in this area. So let me put it here for you to see. Okay. So this is it. So you could see that priority, anytime there's a swing, that's price trades back into. So for instance, if this area, the body of the candles had traded into this area and then still had got rejected and shot up higher to go and take down highs or trade back into an old time or long time order block, any of the long term PDRAs. So if it's an order block, for instance, if price was rejected here and traded back into an order block, traded back to take down an old high, then we are certain that the rejection block has really formed. So we wait for any form of reversal into that rejection, then we take a trade. So this is how the rejection block works. So this is on a 4-hour time frame. Beautifully, price got rejected when it traded into. So if you are taking a trade with the rejection blocks prior to the old rejection that has happened here, now where do you place your stops? So your stops will be right below the wick of what you are considering as the rejection. So for instance, as I took the trade here, what happened is my stop loss was supposed to be placed here below this. So easy. All right, now let me show you another rejection block that has already been formed that your attention has not been drawn to. Now let's move on to the higher time frame, which is the weekly time frame, sorry. Now, can you see any rejection block formed inside this area? Now open your eyes well and tell me, have you seen it? Can you see any rejection block within this area of trade? Can you see any rejection block within this area of trade? Beautifully, there is one. Yes, there is. Can you see? Just open your eyes and see. Look at this wick here, which has been formed all the way down. extend it further. When you extend this further, you can see that this wick from the body of this candle all the way down here is a nice rejection block. Why do I classify it as a rejection block? Based on what has transpired. So now look at it. Price went up, traded back into this area, and then it got rejected, and then it went traded a bit up again. So what is our expectation? Now we are looking for price to necessarily trade back into the rejection block and get rejected and go up higher to take. So now you could see that this rejection actually traded back into an old term, a long term PD array, which is this other block. So price traded into it and then it came back down again. So we still have this rejection block valid. So price trades into this area. Now let's put a line just on the body of the candle. So I'm expecting that should price come and touch the body of this weekly candle, what do? We execute a trade. We buy. Where do we put our stops? Now, to minimize the lots, your lots, or to minimize your risk, the best you can do is to even wait and not take the trade. For price to come down into this area, let me show you on a smaller time frame. For price to come down into the area and possibly see some level of precision to see that price is actually going to reverse. And what are some of the drawing lines? Is either you see that the structure will shift on a smaller time frame, then you can use that as a premise to enter your trade. Without that, price can descend and come down into this level, take down the low here, and even come down further, take down the low here. If the rejection block is still valid, it won't come and take or sweep the low here. So you have to wait to see that price is actually showing a sign of a reversal. Then you execute your trade. If price touches the body of this candle, and you see the sign of rejection on the 1 hour time frame, that you could see that the structure has shifted, then quickly you can find a very nice order block after the shift. If there's a fair value gap, you wait for price to retrace into, then you enter your trade. This is a higher time frame setup. If you don't have enough capital, you don't venture this form of trade. What is my bias? My bias is that we are still bullish because we had a shift in the structure just some weeks back. So as price came down here, price went up and shifted the structure. So we have a structure shift. So we have a structure shift. The structure has shifted. So what we necessarily expect is price should retrace down, find some level of support, or find some trade into any PD array, and then we see a rejection back into the sky. So wait, if price is not showing any sign of reversal inside this rejection area, you don't execute the trade until price shows a sign of rejection. Then we take the trade and we look at going up higher. There is an order block inside this area that price can necessarily come to this other block. Price can necessarily trade into the other block, sweep the short-term low it has formed inside this rejection area, and still go back up. So you have to always wait for the entry requirement to be met before you execute a trade. All right, so with that said, let's wait patiently and see the signs that price would draw. Let's look at the patterns. Let's look at the footprint that price is going to leave for us to see that we have the go ahead. All right, that is seen on the smaller time frame that the structure is going to shift. Then we have the go ahead. All right, guys. So with that said, for volatility 75, let's head on to volatility 100 with the trade that I posted yesterday and give you an update. So I posted a live trade of volatility 100 yesterday. Let's go to that one and then I give you an update. So as I said, if you are new to this channel, think of subscribing for more videos like this where I give you the patterns and I remove the curtains for you to see where price is likely to head. All right, to minimize your losses on the market. One advice that I always give is be patient and wait for market to come to you. Don't run after the market. Don't run after price. Let price be satisfied with what it's doing and come to your level where your trades are ready for execution. All right. So yesterday I executed a trade on this, and it is the same idea that was used in executing a trade on this particular asset pair, volatility 100. So can you see a rejection block inside this area? Beautifully there was. Look at this area. You could see this price had traded into this rejection area, and then you could see how it rallied down to take this low and all. And then I noticed price was trading back into the rejection area. Quickly I went to the chart. Now you ask yourself, you normally expect that we execute the trade somewhere here on the body of this candle. Why this time around price rallied a little bit into almost into the mean threshold of the block before the reversal. Now let's go down to 1 hour time frame. Let's put a line here, and then on the 1 hour time frame, beautifully you could see that there was a rejection block also formed nicely on the 1 hour time frame. So look at the body of this block on the 1 hour time frame. This was the rejection block we saw on the on the 4 hour time frame. Now on the 1 hour time frame, you could see that price had also formed beautifully here again, from that rejection. So from this area to this area, we noticed that price traded into it and then it got rejected. So we noticed that it confirmed for us that this is a rejection block. Now we come back, price traded all the way, came back, and now traded into the body of that rejection, and this was the place where we could have entered our trade. Nevertheless, I didn't enter the trade here because I wasn't on the chart. Then price traded away from that and closed as a bullish candle here. So price traded all the way and then it began to form the bearish candle here. Now beautifully, what can you see? If this bullish candle was rejected from the rejection block, then this forms another block. So Look at this. Price traded into this other block. This is where I executed my trade. And then what was the first take profit level that I posted? I posted that you could take your profit level first TP here. Beautifully from here to here, you may say that, oh, this is just a small movement. But depending on your lot size, you could have made millions trading this particular signal. I exited here. I exited, not even here. I exited before this. I exited somewhere in the mean threshold of this particular candle. And look at where price traded. Price traded all the way down, took down this equal lows here. This equal lows, price took it down and then traded all the way back down. And look at where we are still now. So on the bigger picture, as I already discussed, that volatility 100 has also broken structure up to the upside, but we are seeking for liquidity on the lower or the downside to rally up. Okay, so you could see where I've set a trade already, a buy limit already, waiting patiently for price to trade into that area, and then we see the reversal back up. So the structure here has already been broken by some small pip, which if you are not careful, you may not easily consider. So price trading into that, and then we'll see the reversal onto the upside. So that is beautifully a few trades that I've taken considering rejection blocks and other blocks. So with that said, I wish you all the best in your trading and then enjoy your trading. Please share for others to also enjoy what we have here. Have the best of the day. Bye.